Welcome to Golden Days MK. In previous day video we discussed about account opening. So today we discuss about the safe mode of the trading. If you want to say the safest mode of trading, the first one that has been a delivery. So today we discuss about how to trade in delivery. If you have money around 10,000 rupees means first we need to take a delivery 5,000 or 6,000. Most probably 50%. How much of that amount cash you have, that amount 50% amount you need to utilize. So you have 10,000 rupees, you can utilize 5,000 rupees. The 5,000 rupees you can buy only one of the script. So now you bought one standard script at the rate of 100 rupees, just 100 numbers. Okay, so now you bought the particular share in 100 rupees. The share price it will rise up 1 or 2 rupees. So now 102 rupees. Now if you sold the share, 2 rupees profit. So total number of the shares you have 100 numbers, so 2 rupees profit. So 100 into 2, 200 rupees profit. Now you can sell the share. Once you sell the share, then the amount it will be credit in your account. So end of the day, how much of that brokerage and the government tax, apart from that, the remaining amount it will be credit in your account. So this will be basic. Second thing, you just imagine in the opposite way. Suppose you are each and everyone, we expect when you buy any share, the price will be rise up. Okay, so now unfortunately the price will be calm down. Okay, you bought one particular script at the rate of 100 rupees. Suppose you just imagine the script it will be coming down at the rate of 99 or 98. Now present rate 98 rupees. You bought the particular share in 100 rupees. So now how many rupees loss? 100 share into 2. So totally 200 rupees loss. Now end of the day, suppose if you sell the share with the loss, what happened end of the day? The amount 200 will be debit in your account. Okay, totally you have in 10,000 rupees. Now you bought 100 shares, total loss in the 200 rupees loss. So 9,900 9,800 rupees in your account. And apart from that, in a brokerage as well as the little amount they may debit the government tax. So this is the way they may calculate. So here how we can trade in delivery at safely. Previously I said when you have 10,000 rupees you need to buy a share, 5,000 or 6,000 worth of that amount share you need to buy. So remaining 4,000 rupees cash you have. Unfortunately the share price if it come down, what you can do, you can buy remaining shares. For example, already you bought 100 shares at the rate of 100 rupees. Suppose the share price it will be coming down at 99. Now what you can do, you can buy 25 shares. Again the share price it will be coming down at the rate of 98. Now what you can do, you can buy a share 98. How many numbers you can buy? Again 25 numbers you can buy. Okay, again the share price it will be coming down 97. Again you can buy 25 shares. So now you bought around 75 shares in a different rate. 99 25 shares, 97 25 shares, and 98 25 shares. So now if you check the average price, it will become nearby 98.50 something, nearby approximately I am telling. So now what you can do, now the average price nearby the 98 rupees. Now you don't want to wait the price 100 rupees. Suppose again the share price it will be come up 99 or 99.50, you can sell a share with the profit you can sell. So this is the way. Again I am telling that in how you can trade in delivery at safely. When you buy a shares, how much of the amount cash? If you have a 1 lakh rupees means you utilize the amount 50,000 base, 50,000 worth of the shares you buy. Next what you need to do, if you are getting in a profit 2 rupees, 3 rupees, 5 rupees, 10 rupees, that time you need to, with the profit you can sell the share. Otherwise the share price it will be come down, that time you need to average the share. Average the share means that in a little bit 30 minutes once or 1 hour once you need to average a share. If the script price boom in the 100 rupees means when it is reaching in the 1 rupees less, we need to buy less quantity. Then 2 rupees less quantity. That is the way we need to buy, because when the price will be coming down, we don't know the end of the rate, how many rupees it will be come down. At the same time, when the price will be rise up, we don't know how many rupees it will be goes up. So that's why. So in a delivery safely, if you want to trade, what do you need to do? You need to fix that in a amount, the profit amount you need to fix. For example, 100 rupees if you are buying, you need to think how much of the amount you profit you are expecting. 2 rupees means you need to place the order. Once you bought the share, afterwards you need to place that order. That order become in a target price order. Okay, the selling order. At the same time you can place. Now you place the order. You have in the some number, 100 number of the shares at the rate of 100 rupees. When that share price, it will be rise up 101, 102. If you already place the order at the rate of 102, here once the price it is reaching 102, the shares automatically get sold. Once the shares sold, the amount will be credited in your account. That is to be easy way. Suppose you continuously are watching that market. You are thinking when the market price will be reaching 102, that time I can sell the share. What happened? The market price when it is reaching 102, when you get ready to place the order, it will be take few seconds. Within a few seconds, what happened? The price once it is reaching in 102 or 102 rupees 10 paise, afterwards again it will be come down 101 rupees 90 paise, 101 rupees 75 paise. That's the way it will be come down. So at the same time, what do you think? Oh, already I thought that I need to sold the share 102. Now the price it will be coming down. I need to wait. Once you are waiting, what happened? Within a few days, the share price maybe it will be come down or it will be rise up. So if you want to trade safely, you need to utilize the margin 50%. At the same time, you need to fix the target price. You need to place an order, place the selling order. So once the rate, when it is reaching that particular rate, the share automatically will be get sold. So this is the way we can trade safely. And next one we discuss about the intraday future and options trading. So in the coming video, so next video we discuss about intraday trading as well as future and options. So now I said the delivery trading with the short period of the time you are placing the order. This is to be in the short time investment in delivery. Suppose if you want to invest the particular amount in a long time, what you can do that now you have 1 lakh rupees amount. So these 1 lakh rupees amount, you need to split up the investment. In a market, it is there in more companies. More means more number of the companies. So you need to select some standard companies. If your investment becoming that 1 lakh rupees means in a 10% of the amount, you need to invest in a real estate sector. In a 10% or 15% or 20%, you can invest in a bank sector. And consumer goods, in a small scale industries or consumer goods things, you can invest 10 to 15%. So this is the way you need to plan your investment. You need to split up the investment. Don't select one particular company. So one particular company means what happen? Sometimes some of the shares will continuously it will be come down. That time you will be get locked. So that's why you need to invest the amount in a different companies. That means you need to split up your investment. If you split up the investment, sometimes 10 companies you invested 10,000 rupees, each company 10,000 rupees wise, you invested in that 1 lakh rupees. Now 5 companies up, 5 companies down means that some companies you can get a profit. Okay, sometimes the price it will be maximum when it is reaching the price. That time you can able to sell the share. You can average that in which what of the script it will be coming down, the price coming down. That script you can able to get average. So that is the way. So always we need to split up the investment. And the next thing, most probably try to choose the national stock exchange. So it is there in 2 exchanges, biggest exchanges, that is be NSE and BSE. NSE National Stock Exchange and BSE Bombay Stock Exchange. Most probably you can choose in a NSE. Why? What is the advantage of choosing in NSE? NSE itself you can able to find out more buyers and more sellers to compare that BSE. That's why you can, if you choose in NSE, that's to be better trading. You can able to get a better opportunity to sell the shares, better opportunity to buy a shares. So that's why most probably trading, that's to be NSE, that's to be so good. And afterwards, if you want to invest in NSE, you can able to select that in the Nifty 50 script. What is the advantage of selecting in a Nifty 50 script? Nifty 50 means Nifty itself, it is there more companies. The more companies is the 50 standard script. So this 50 standard script itself, if you are trading, it is easy to identify market will be coming up or coming down. Okay, so Nifty means the average of the weighting average of 50 script. Okay, so Nifty, it is not reflecting the total number of all script. positive or negative. Nifty, it is reflecting the 50 script, 50 standard script. It is there, some of the company real estate, some of the company consumer goods, some of the companies that banking sector and telecommunication and infra. So different sector, some percentage it is there depending upon the company worth, it is there. So Nifty 50, that is to be most probably standard script. So if you invest this script, then you can able to identify the market will be coming up, means most probably your script in a positive, and the market will be coming down, means that in a most probably your price, it will be, your share price, it will be coming down. So you can able to identify easily. And the script, the exchange, it will be exchange selected this script are standard script. So whenever you are trading, you need to select standard script. Afterwards, whenever you are taking in a delivery, most probably if you are thinking you are a long time investor, minimum you need to wait minimum 3 years. Okay, so minimum if you are most probably 3 years, 4 years later, the amount become in a double, it is there in a more opportunity. So that's why when you are investing in the long time investment, that time what do you need to do? You need to wait more than 3 years, you need to wait. Otherwise, previously I said, now in a delivery you need to take shares and you need to sell the shares within a short period of time, at the same time, or within 1 or 2 days, or within 1 year. So this should be in a delivery trading short time investment. So delivery trading short time investment also good, and delivery trading long time investment also so good. And who they don't want to face the risk, for them you can able to invest the amount in a long time investment in a 10 years, 5 years. So 5 years you don't want to do anything. After 10 years, if you are looking, most probably whenever market become in a peak, that position you need to sell the shares. And afterwards, in the whenever you are taking in a delivery, most probably you just choose the script above 100 rupees, the price becoming above 100 rupees. Whatever the script have more than 100 rupees price, the price, it's the script itself, you can able to see that in a more movement. At the same time, whatever the script it is there in a less than 100 rupees, the volatility, the movement becoming a very very less. And one more thing, whenever whatever the script less than 100 rupees, sometime what happen, the price will be continuously will be come down. Okay, if you are watching the sum of the script, the price becoming less than 100 rupees continuously, 1 month, 1 year, 2 years, continuously it will be coming down. So we can say example in so many script we can say. So if the price is more than 100 rupees, means you can able to see that in a more momentum. So it is then more opportunity to get a profit. And one more thing, that you can able to get an exit from the share. So that's why you need to select the price becoming more than 100 rupees, you need to select. One more thing, that some of why I am telling these things, some of the investor what they may think, if I am choosing that in a 1,000 rupees, one share price becoming 1,000 rupees, I am investing in a 10,000 rupees, I can get only 10 shares, each share 1,000 rupees, so only 10 shares I can get. At the same time, if I am investing that in the share price becoming 1 rupees, now I am investing 10,000, means 10,000 shares I can get. So the price will be 1 rupees up, then I can able to get 10,000 rupees profit. Otherwise, the price becoming a double. So that's why most probably the traders, they may think that in some of the not for all, some of the investors, they may think if we are choosing that in a less price, we can able to get more quantity, they may think. But the thing is, the 100 that in a 1,000 rupees share, okay, and the share price becoming 1,000 rupees, it is changing into 2,000 rupees. And one more script, the price becoming 1 rupees, it is changing into 2 rupees. Which one it will be reach first? Which one is 1,000 rupees? 1,000 rupees worth of the share price, it will be rising up and it is reaching 2,000 rupees. How much of the time it is taking? And 1 rupees share, it is changing into 2 rupees. How much of the time it is taking? If you compare, which one is better? The 1,000, which one is 1,000 rupees price? That share is best. So most probably don't select the price becoming a very very less, that kind of the script. Very rare case, everywhere it is an exceptional case. Very rare case it will be happen sometime. The 1 rupee, 2 rupees, 3 rupees shares, it will be rise up. Sometimes it will become double. But there is to be choosing that in a below 10 rupees or below 50 rupees shares. That is to be a risk, means in a higher risk for taking a delivery. So that's why in the price, whatever the shares price becoming that price becoming a more, that price is select. You can able to see that in a more momentum. Okay, and next upcoming upload itself, we can able to we discuss about that in a future trading, option trading, and intraday trading. Thank you.